Alex here with KGI Capital, and today I'm going to share a little bit about our background and how we got started in the real estate investing game. It's a question that we get a lot from a lot of people who are interested in investing with us or people who are interested in getting started in the space themselves as an active investor. So I thought I would just answer the question and give you guys some background on how we got started, how we progressed in our path to where we are today, and how we continue from there. So we started out in the real estate space in 2018, and we started out with a house hack. It was a duplex in California, and actually it was a 3-bed, 2-bath, and there was a granny unit attached to it with a garage as well that was also attached to the granny unit and the house. So we bought it, we rented out the 3-bed, 2-bath, and lived in the granny unit while we did all of the remodeling to turn it into a 2-bed, 1-bath unit on our side. So we lived in it while we remodeled it, and we ended up being able to turn it into a duplex essentially. After we did that, we realized how much we enjoyed the process and how powerful real estate investing was. And we said, oh, we like that, let's do it again. But we didn't want to do it in California again, because California isn't the best, in our opinion, when it comes to landlord-tenant laws, investor friendliness, and also taxes. So we decided to, at that point, go out of state and start investing in distressed properties elsewhere. So we looked in a couple different areas and narrowed down our search and did a lot of market research on different areas based on the criteria that we were looking for. And we then went and started investing in Jacksonville, Florida. And we were able to buy a distressed 4-plex there. That was a big project for us at the time. We learned a lot. It ended up being a great deal. And we were able to basically do a $130,000 rehab on that and manage it from afar and do kind of like a BRRRR strategy on it, for those of you that are familiar with that. And basically buy, fix it up, rent it out, refinance it, and then hold it long term for the cash flow and appreciation. So after we did that, we also decided that it would be nice to have an additional market to have a little bit more diversification. And we decided to invest in Northern Indiana as well. And that's much more of a cash flow market. The Jacksonville, Florida market does have cash flow, but it's also a much heavier appreciation market, absolutely much heavier than Indiana. So Indiana is just pretty much a straight cash flow market, and we wanted a little bit of that. So we started investing in properties there in Indiana. So we bought a couple of different single families, and it was around this point where we also did a joint venture where we partnered with a coworker who was interested in investing in deals passively. Since we already had the team and the experience and we already had everything set up, it was actually a great partnership because he was able to do his thing and just let his capital grow. And we were able to handle the day-to-day, which we were already doing for all of our other properties anyway. So it actually worked out really well. And that was really when we realized how much we enjoyed working with others involved in our deals. And pretty much from that point on, we had different people who were interested in investing with us. And so we got to the point where we decided that it made the most sense for the people who were interested in investing with us and for our own economy of scale to move into the commercial multifamily space. So that's where we directed our attention next and started moving into. From there, we bought a 72-unit apartment building in the Oklahoma City area. And we did that with a couple of other partners as well and brought together all the capital needed and closed on the deal and started working on that. We did that in a syndication model. So we raised capital from passive investors and we are the operators of the deal. So we're the active investors in the deal and they are the passive investors. And that is basically how we got started in the real estate investing game. So we started out pretty small. We started out with just a little single family that we turned into a duplex and added a lot of value and sweat equity to. And then we moved slowly into larger out-of-state properties and apartment buildings and commercial real estate. So as you can see, it doesn't have to be something that you start and you just go 0 to 100. You can take your time, you can double it every year, the amount of doors that you invest in. Or if you're a passive investor, that's probably the easiest way to invest in a lot of units without having to have the crazy amount of experience and knowledge and time and energy that you usually would have to have if you were doing it in an active role. So definitely one of the beauties of being a passive investor. So I'm always sharing new information about multifamily real estate investing and how to passively invest in it and the knowledge that you need to be able to understand what you're investing in. So if you're interested in learning more, then feel free to follow us here on the channel. I'm always sharing more information there. You can sign up below with your email, and I share a lot of information, much more in depth about how to get started into this multifamily real estate investing space, how to become a passive investor, and what you need to know to get to a level where you feel comfortable investing in one of these types of deals. And if you already feel confident in this type of investing, then feel free to also reach out to me and schedule a time to chat. I'd love to have a Zoom call or a phone call with you and chat more about what your goals are and see if I can help. So that's just a little bit more about us, and we are super excited to keep on pushing forward and growing our deal flow and deal acquisitions. And we continue to look for more distressed multifamily properties in the 20 to 100 unit range that we can actively go in, fix up, and improve and add value to for our residents that are living there, and then also for our investors.